All right, my story of September 2008 financial crisis. So we were in New York City. We had a client who wanted us to go visit their insurance company. Long story, not important. They wanted us to go visit their reinsurance company, which was AIG. So on September 15th, 2008, we actually had a meeting at the headquarters of AIG. Long story short again, but we were caught on film walking out of the AIG building on the day where the U.S. Treasury, the federal government, bailed out AIG to the tune of, I believe, $80 billion. It later went up, but we had no idea why these film crews were outside. I mean, we were in the financial crisis, so I guess it was New York City, but we had no idea what was going on until later that day. And I was walking around New York, and I literally stopped someone and said, "Why are all these TV crews and film trucks out?" And of course, I've now been in banking for like 20 years, and someone stopped me and they just looked at me like I was the stupidest person on the face of the planet and said, "The government is bailing out AIG, $80 billion bailout. Are you stupid?" And I just kind of went, oh, okay. So again, another little bit of evidence that just because you're working for a financial institution, working inside of banking, just because you're in the industry, does not mean that you really know what's going on. I know this is self-incriminating, self-deprecating, but the truth is, when you work for a bank, and I've been through, this is now the fourth financial crisis that I've been through, even like what should we do with our clients, with our decisions that need to be made here inside the bank on a daily basis, everyone's just kind of scared. They're kind of clueless and don't really know what to do. And this is what's happening right now at every bank, finance company, financial institution, private equity firm, no matter what. They're all scared. They're all focused internally, trying to figure out what to do. What should their next move be? And it takes time. It takes time for that to work itself through. So while every financial crisis certainly has its unique characteristics, this one's no different. This one's brought about by a health crisis, by something that we've never seen before. A lot of times, financial crisis, the catalyst for a financial crisis is something that maybe we've never seen before. Certainly in 2001. The dot-com bubble, which then ultimately, in the fall of 2001, we had 9/11. That had never happened before. No one had any. There was no. That was call it a black swan event, whatever you want to call it. No one had ever seen that before, and so we're experiencing that in terms of a global pandemic in the modern era on a global scale like this, where none of us have ever experienced this before. So that is unique. However, there are common characteristics of a financial crisis, and that atrophy that sets in terms of the decision making is a fairly typical response that I've experienced through other financial crises, and fear. And that is usually followed by a completely different ecosystem that takes over. And that ecosystem is mostly the distressed market, the special situations teams, the distressed debt markets, the distressed M&A, distressed sales, restructuring, and turnarounds. And it takes a while for the transfer of ecosystems to happen. That also leads to a period of pause. That's also what we feel is happening right now. It takes some time, usually about 3 to 6 months before the shift of ecosystems is complete. And we're into that right now, but it's probably going to be mostly on that pause throughout the second quarter. You'll start to see a bit of a transition, and then what we feel like is the likely result is a huge spike in distressed M&A and the turnaround ecosystem in the second half of 2020. So that changeover is happening right now. Look, we would like nothing more than to believe that the economy could snap back quickly in some kind of a V-shaped recovery. But given everything that's happened in the last few months, specifically in March of 2020, that just doesn't seem logical. In my life, in my career, I've never seen anything like what happened to the U.S. economy in March of 2020. I just don't understand how that level of severe disruption could not take a long time to put back together again. Right now, the world and the economy are on a pause, recovering from just an amazing series of events and completely unforeseen series of events. And the global economy was already probably sinking into a recession even before this global COVID-19 pandemic took us all down to our knees. But certainly now much of the world's going to experience economic contraction throughout 2020, followed by a period of slow and steady reconstruction. So, and there's still so many possible outcomes to the spread of the virus, so many scenarios, and nobody has any real idea of how long this is going to go on, and there's multiple front lines, multiple scenarios and outcomes. So it's impossible to predict how deep this recession is going to be. We do feel strongly that the second half of 2020 you're going to see a pickup in M&A activity, but it will be slanted more toward distressed activity. And eventually the U.S. economy will lead a global recovery and expansion from this. We just have no idea to predict when. So we're on a pause right now. Q2 is going to see a lot of people focused internally and recalibrating their portfolios and reassessing what's realistic to do with their portfolio companies. And then the second half we'll see a pickup of activity, but it will be at lower leverage points and more focused and slanted toward distressed activity.